Tuesday. Thank you so much for attending today's webinar. It is top of the hour, so we're going to go ahead and get started. I'm Renika Lightborn. I'm truly delighted to have Mr. Robert Quinn from Providential Capital as our guest speaker today. Thank you once more, Robert. So,
thank you for having me.
Absolutely. Robert will share the ins and outs of private equity investments in some of the fastest growing industries, specifically within diverse and minority groups. He'll also give us an insight into his background and experience when it comes to investing in private equity deals, what you as investors should be on the lookout for when you're reviewing different opportunities, and then some of the short and long-term impact that you could have by investing in your local areas. Before I turn it over, I do want to just give you a high overview of what self-direction is, the different options available to you, and the steps to get started with us at Advanta once you're ready to open up your account. If you have questions, definitely feel free to type those in the question box. We will allocate some time at the very end just to get those answered for you. Again, I'm Renika Lightborn. I'm one of the business development specialists here at Advanta. I've been with Advanta since 2019, so about 2 years now. Prior to joining, I'm also an actual client of Advanta, so self-directing my IRA is something that I actively do. If you have questions, you want to do a deeper dive, you want to talk through your exact scenario, always feel free to reach out to me or my colleagues. You can give us a call, you can send me an email. I would also encourage you to visit our website, advantaira.com. It's a great resource for you. Just a little history about Advanta and who we are. So we've been in the business for nearly 20 years now. We are seen as one of the leading self-directed IRA administrators in the business. Our headquarters is located in Largo, Florida, which is the Tampa Bay area. And also we have an office here in Atlanta, which is where I'm located. But we work with clients nationwide. We also have clients that actually use their IRAs to invest internationally, so that's an option for you. We do have nearly $2 billion under administration. Just know that any cash sitting with Advanta is FDIC insured. And then one of the things that we really take a personalized approach to is providing our clients a concierge style service, meaning you have a dedicated account manager, a direct point of contact, someone who's there to help you dot the I's and cross the T's when you're ready to make your investment. And then our commitment to providing you just different educational content that includes expert like Robert on today's presentation. So just a little housekeeping before we really go further. Just know at Advanta, we don't give tax, legal, or investment advice. We also don't endorse any particular products. That's why we always encourage you to, do your due diligence, confer with your professional team. So whether that includes your CPA, your attorney, your financial advisor, spouse, whomever, we just always encourage you to make sure that do your due diligence. The information that we present is just educational purposes only. So exactly what is a self-directed IRA? In its simplest form, a self-directed IRA just simply means that you as the account owner, you have complete control over your retirement funds, you have complete control over the investment decisions. Nothing happens until you say it does. So most people, we have IRAs that's invested in the stock market, but the IRS actually says that you can use qualified retirement funds to really invest in a long list of different opportunities, which includes but not limited to real estate. A lot of our clients use IRA funds to invest in real estate. So whether it's a fix and flip or it's a buy and hold, your IRA can invest and actually be the bank where you're investing in notes and mortgages, actual land itself, heavy equipment, farm animals, oil and gas. And then of course, today we're going to solely focus on private equity opportunities where your IRA can actually invest in purchasing or invest in private companies. So typically during my initial conversation, when I'm talking to a potential client, they want to know, well, why do people choose to self-direct? You can look to self-direct for any number or combination of reasons. I'm just going to highlight 3 of them. 1, if you have an old 401k that's sitting, maybe you left a job, a couple years ago and it's just sitting there idle, you can elect to roll those funds over to make your investment as opposed to having to, tap into your savings or take out a personal loan. Another reason as to why clients choose to self-direct is because of the ups and downs in the stock market. No individual can control the stock market, but at least with self-directing, it gives you the ability to truly diversify your account. So if you're investing in real estate or you're investing in a private company, you really get to to not, only hedge your bets, but also, diversify and potentially receive greater returns. And then the tax benefits, having those profits, those rents, those dividends flow back into your IRA account, tax-free or tax deferred. Or again, a lot of times people make the investment of putting the investment within the IRA so you don't have to deal with those tax liabilities personally. In terms of the different accounts that can be self-directed, again, just know with self-directing, the term just means you decide what is it that you want to invest in. But the actual account type is pretty straightforward. You're investing in a traditional IRA or Roth IRA. Traditional meaning, tax deferred, you pay taxes later. With Roth, it's after tax dollars. If you're self-employed, have a side business, entrepreneur, business owner, you can look to self-direct a SEP, simple, or solo 401k. A solo 401k has great flexibility. It has higher contribution limits to where you can actually contribute 58,000 for 2020 if you're under 50, and then if you're over 50, you have the additional catch-up of 6,500 to where you can put 64,500 this year. Some lesser known accounts that we see a lot of people starting to self-direct includes ESA's Educational Savings Account, where you can put in 2,000 per year per child. And then with an HSA account to cover medical related expenses, it is based on having a high deductible plan, but you can, as an individual, you can put in $3,600 a year to self-direct in your HSA. If you have a family plan, you can put in $7,200. If you're over 55, you have the additional $1,000 catch up. And then with former employer plans, again, any former employer plan qualifies. So 401k, 403b, TSP, in terms of rolling those funds over to self-direct. The key thing that you want to remember here is just knowing that the contribution limits varies based on the different account types. And then with a Roth, distribution is tax-free at retirement. When it comes to getting started with us here at Advanta, we've really streamlined the process for our clients in 3 simple steps. Step 1, you go through the process. You can complete the application on our website at advantaira.com, or myself or one of my colleagues would send you the application via DocuSign. It's going to be able to prompt you and do everything needed to complete the application. But also, too, you have an assigned account manager, someone who's there to guide you, answer questions relating to your account. Step 2 is actually funding your account. So you have different options when it comes to funding. You can roll funds over from that former employer plan. If you have an existing IRA, you get to decide how much you want to transfer, whether it's a partial amount or a complete amount to make your investment. There's no tax liabilities for you to do that. Or you can make a cash contribution in accordance with the IRS limits, or use a combination of both 3. And then finally, step 3, start investing. What is it that's of interest to you? Do you want to go ahead and invest in 123 Main Street that's down the street from you, or you want to go ahead and diversify and really invest in a private equity opportunity where you get to invest in a construction company or a manufacturing company? You pretty much have a blank canvas in terms of what works best for your IRA. And with that being said, I'll go ahead and turn it over to our speaker, Mr. Robert Queen Jr. So Robert, let me make you the presenter.
Okay, all right. So I'm not sure what the delay was. Okay, good afternoon, everyone. My name is Robert Queen Jr. I'm with Providential Capital. And I would just like to go over some of the things that you'll start to see that are going to be more, I guess, prevalent in the self-directed area, self-directed IRAs especially. We look at alternative investing in the minority businesses and their communities. All right, so investing in alternative, can you see the screen? It has changed.
Yes, you're controlling the screen. You can just, yes.
Okay. Yeah, the discussion that we'll have is assessment of private investment in the communities that we live, or better yet, even the communities that we specifically start to speak about, and that's the minority, the women-owned, and the veteran communities. And when we mean communities, we're talking precisely about the business communities, because businesses that are in communities usually are the fulcrum, the catalyst that builds communities, because that's just exactly what economic development does. The other thing that we'll cover, the impact of short and long-term investment in these type of communities, color, how to become a partner and preserve wealth, and then the importance of investing in supporting the local minority and women-owned, veteran-owned businesses. A little about me. I've been in the game for about 21 years, went through all of the facets from accounting, finance, management, consulting. I pretty much spent a good portion of my time in the management consulting arena. And what I have found is that all businesses have a core, okay? Their main thing is pretty much built on the administration, finance, and operations. However, one of the things over my career that I've noticed is that most small businesses and mid-sized businesses usually get to a certain level, especially when we're talking about the minority, veteran-owned, and women-owned businesses. They reach a certain level. And what I've found in that is why I really started to go down the road that I have and pursued this as a passion, but also as a help to the communities, and then had to turn to investors to help them understand why these particular spaces are usually underrated, for lack of a better term. But throughout my career, that's what I have done. I spent most of my time in the management consulting field. I am a U.S. veteran, so that's why also working with veterans is a major plus to me. I spent time in the government as well, FEMA, the State Department, and Homeland. I worked with one of the largest African-American SBA loan providers, and this was a great opportunity to also learn how to help small businesses, but everything went south in 2008. If everybody remembers when we had that credit crunch, the credit decline, we went from making almost 55. Actually, we were doing 500 loans, micro loans to small businesses throughout the nation, and we went to zero in September of 2008, from 500 on average loans each month to zero. And because we weren't a company that was diversifying, we did not have the self-directed space, or wasn't even aware of it. And these are the things that we have learned over time, how important investors in the self-directed industry and in that space, how important you are. And now we're really focusing on how do we help the self-directed investor get opportunities that otherwise would not be allowed or even really in place for them to participate in, but then even to go as further to how to really help small businesses get the access to that type of capital, because that kind of marriage really does, as we're starting to find out, work out very well. So my education is an MBA in finance. I have a BBA in accounting, a BS in legal studies, and I'm now working on my PhD in business administration. One of my mentors at one time, and I'll make you laugh here, said that, brother, you got more degrees than the thermometer, but yet you always broke. Okay? Well, one of those things that I had to learn over time, I've never failed at really anything that I've done. The only thing I've done is that I found 10,609 ways that it ain't going to work. Okay? With that being said, I always understood how important education is, but I also understood how important application of that education, and then applying it with the resources, which we have based everything that we're doing right now on information, guidance, and resources. So this is what we bring to the table, just to educate folks on these things, whether it's an investor or a small business owner. This is what's available, and this is how you should be able to apply it, and then those resources will then be available. So with that being said, also I am a principal in a private equity fund and also a management consulting firm. Working on this first part of assessment of private investment in the community, I want to make sure that everyone understand that the disclaimer is this is not investment advice. This, at any time, you should always consult with your attorneys, CPAs, and financial advisors. These are just strategies that we use and that we're employing in order to make sure that, we have our mission accomplished. And we just want to share this with others so that they can also understand that there is a great opportunity in this space. So when you want to operate in this space, you want to start to figure out what type of business to consider. What are your goals when you invest? My favorite one, how do you determine what is a good return or not? And I always say that a good return is when I get my money back, and a better return is even when I get it with interest, okay? So the final thing is how to create a strategy to do community investment. As we go through this, you'll start to really understand that it is a space that has been traditionally covered by the angel investors, your accredited investors, but now that the self-directed IRA is becoming a lot more prevalent, it is important to make sure that everyone has a good understanding on how to do it safely. Because most people, when you're doing your self-directed IRAs, you have to understand, yes, this is your retirement money you're working with. But if you're informed enough, if you're working with the right people for that guidance, and then you're able to really put those resources to work, you're going to outperform usually the traditional route, and you can do it safely. So the businesses that we look at and that have been more, for lack of a better term, safer in a sense, because any investment always has risk. But the thing that a good investor does is find out how to mitigate or hedge that risk to the best of their ability. And then, again, look to find the better opportunities. Whereas, when you start to go into the minority, women, and veteran-owned businesses, I'll give you some statistics that diversity does have a place in this. However, the biggest thing that you always want to remember is that with that type of risk, if you're not knowledgeable in that area, you really need to get somebody that is, because those are sometimes you don't know what questions to ask. And if you see a good minority business or a woman-owned or veteran-owned business that says, hey, we're trying to raise, X amount of dollars, well, you want to basically know, how do I assess this business? And one of those key things is due diligence first. Due diligence is always going to be important. Due diligence is the one thing that you must not ever get away from as an investor. And the things that you would want to do is first make sure that you're looking and have kind of access in this realm, in this space. You want to make sure you have access or some sort of access to the principals, meaning the business owner. So if they're doing a raise and say, hey, I need to raise $100,000 for this purpose and so forth, the first thing that you want to know is, okay, can we do a background check on you? And that background check, you're not necessarily looking to say, okay, their credit, because most entrepreneurs at this place are going to not have the best credit. That's the whole purpose of they're not even bank ready. So therefore, that's why they're in this space. They're looking for alternative finance. So that alternative financing simply means that as an investor, you're going to need to, do your homework. You're going to have to ask them, how transparent are you? Are you going to be transparent with me? And running a background check is very simple. You're really looking for one, any criminal history. Because there are criminals out there that are waiting to, this is just another pool of money for them to say, hey, I'm gonna go ahead and create these companies and do this and that. And then before you know it, again, they have gone through and did what they've done. Now, my partner, our co-principal, has some horror story that was favorite was that she was working with a venture capitalist. She was doing the fund administration. And, the venture capitalist went and invested in the company into the principals. And I think it was roughly around probably $1 million, maybe 2 million or whatever. And I think she said in 6 months that they couldn't even get them on the phone anymore. Okay, so it was like, this is venture capitalists. This is what they do. They're supposed to kind of do that kind of due diligence. They couldn't get the folks on the phone. Did everything. I think they even actually went to the place and they had actually closed the office down and everything. So it is important that you understand how important you have to do, or how important doing your due diligence on that company and their principles is. The other thing that you want to make sure is teams. You want to be able to make sure they have a strong team. If they do not have a strong team, then you would want to ask, okay, what is your plan? Because they have to have a business plan. If they don't have a business plan, you want to really they're not ready for you to be investing. Okay, but you want to see a company that either has a team or at least a strong staff that is accomplishing or have the ability to accomplish their mission, their objectives, because the whole thing comes down to revenues and net profit. That's the bottom line. There's no ands, ifs, or buts. There is some details, but that's where we stay. So those are kind of like the two things right now that I bring out, that when you're looking at any company, whether it's a minority women or veteran owned, and you're using your self-directed IRA, make certain that you are going to do your due diligence on it. The industries that you would want to consider is, again, the B2B. These are the ones that are listed right now that we look forward to. When we say B2B, usually it's companies that are either selling to larger companies that are getting started, or they're companies that have that ability to sell to other companies. The other thing is mergers and acquisitions. We are big on this. Most people right now, and we'll talk about this in a little bit later, but mergers and acquisitions, right now, a lot of companies, especially after last year, are just truly not willing to go through and kind of rebuild. So therefore, they have enough to just basically either merge with another company or just sell the company altogether. But these are good deals to be in, providing that they are done correctly, because the returns on these typically are usually they're usually above average, for a lack of a better term. The returns on them are usually above average. Another one is government contracting, which is always going to be great for the minority, women-owned, and veteran-owned businesses because of the set-asides. Now, we know that if our government ever runs out of money, whether it's state, local, or federal, then we all in trouble. But usually that is a, good investment, stronger investment. I'm not going to keep saying that it's going to be a lower risk, because I have worked with businesses as well that has been in government contracting. In particular, one company was doing great. This gentleman was a minority owned. He was a veteran. He had all the monikers on, all of the set-asides that he was going through. However, had a great team. And one of his biggest mistakes that, again, oftentimes we try to get our, whether they're client or investment, get them to understand, do not get so comfortable with that government contracting, that steady capital or that steady revenue, that you start to forget that you still have to build out more customers. You have to. They got to a point where he was so comfortable that they've had to continue to grow the business. And when those contracts started running out, guess what? They were in trouble and they could not continue. So these are the ones that we say that when you're going to, again, invest in these are great investments to get into when they're government contracting getting started. But this is why we also ask for that transparency kind of thing, because you want to be able to know that they are, hey, we're going to supply you a quarterly, if you're going to be in a long-term kind of investment with them, it would be prudent to ask that, hey, we want to have quarterly, you got to give us quarterly reports. You got to keep us informed. We need to know, especially anything that's happening with the company that is vital. And those are the things that, as a self-directed IRA, is reasonable to ask for these companies that are in that space. So another thing is that we look at is established retailers. There are companies right now that we are working with that have, roughly like 1 or 2 stores, but they don't know how to grow the store. So this is where we come in, not only in the information and guidance, but we're able to bring in those resources. Those established retailers are great when they are open to not only listen and learn, because they have learned a lot. You don't want to go in saying, hey, well, you guys don't know what you're doing or whatever. No, that's not the case. What it is that you want to be able to say, how can I help? And those are the ones that are willing to usually say, yeah, we're going to be very transparent. We don't want you showing up every day asking how my money is, all right? What we do want you to do is be able to make sure that we can actually convey the information, work as partners, but know that your money is working for you. Established service businesses, those can be of any basic type service businesses that have a strong revenue, committed customer base, client base. Those are good businesses as well. And then, don't ever forget also, how do they impact the community if they are in that type of space. So some of the things that we like to make sure that most of our people understand, anyone that we're really dealing with, excuse me on that, is how the investment, self-directed IRAs and how they basically stack up to the traditional investments. As I had mentioned before, in this space, when you have companies that are growing, that are small enough, some are able to go to the banks. You have to have that you have to be bankable. Some have the opportunity to find angel investors and angel investor groups. And the only alternative outside of that would be your accredited investors and your VC funding and your institutional investors. But usually those are only going to be the ones that are interested, usually out tech, software, the sexy, as they call it, the sexy investments that usually get that attention. Just start to think about, how when you start to really get into the space of, hey, let's start really seeing how these community type businesses, the businesses that if I ride past there, and it's like, let's just say for a furniture store. Okay, some furniture stores do extremely well, and they usually turn out to be mom and pops, been there for a minute, but that mom and pop really has a brand that is unrecognized in a sense. And then also it's a fixture in the community. Well, sometimes they're looking for money too. Sometimes they get turned down by the banks. And that's sometimes it's just a conversation. Hey, are you ever looking for partners? Not to say that, again, some aren't, but some are. You may go at the right time, just knowing this in your community. I've spent time down in in Houston, and one of the biggest things that I've always taken from there is, if there's anybody here that knows anything about Houston, there's a Mattress Mac. Okay, his name is Mattress Mac, and one of the things that is so great about his story is that that's basically how he got started. You know, his furniture store, Gallery Furniture, is a huge fixture, uh, uh, um, kind of a landmark, so to speak, in Houston. And he did this where I think they're now, they off of one store, they pretty much was grossing anywhere from 300 million. How that made it so unique was that this is one store he had that, because he built the brand, because he was such a fixture in the community, he was basically, and he started with, family, friends, investing, and so forth. But he's grown it to that empire, and those are the kind of things that can happen. Yes, whoever did invest early in his, startup and all, it wasn't technically a startup, but it was, he was, again, he had friends and family. The whole point I'm trying to make is that they were rewarded well, because it is still one of the top furniture companies, and it is still family owned in Houston. So I say all that again because so many of our the groups that VCs truly, kind of overlook are the pretty much the minority, big time on the women owned, and then veterans. That they, again, the VCs are missing out because they will overlook this, genre, and they will put in big money into the smaller companies. But those companies that they're, are investing in, again, they're more sexy, not necessarily your community based, mom and pop, or you're even, your little Burger State. The whole point, again, they're missing out on nearly $4 trillion as statistics show. But that is, again, is an opportunity for self-directed IRA investors. Okay, so as I was stating, it's right now the opportunity is great for self-directed IRAs investors, because again, the space for your competitors, so to speak, your angel investors, your accredited investors, your VCs, all of those pretty much choose not to really operate in this space. And when you have people or experts that are able to help guide self-directed IRAs, if you have financial advisors that are very familiar with this space, this is something, again, that you can build a legacy on. You can truly build a legacy on. And just so you can understand some of the things that, again, because of the space that we try to get self-directed IRA investors involved in, and it really just goes back to, again, the numbers. All right. So as you can tell, there's about 40% of Americans that are in a racial or ethnic minority that claims themselves in that space. One of the biggest things that most people kind of overlook is that, say, for instance, the Latinx and African American communities, they spend in total a combined let me back that up, $3.9 trillion annually, but yet they own less than 10% of that wealth. And one of the things that affects the community more than ever is the fact that most of that wealth that these business owners and the ones that do start businesses, those that who try to invest in their community, they do not receive or see the reciprocal or not reciprocal, but they do not see the results of that investment, because again, we have to understand most of that money, when you have a Walmart come in, when you have larger chains come in, it usually kills the local business owners and their business. It really does take a toll on that. We've seen this throughout the country. It's not just a minority or women-owned or veteran problem, but there is a counteraction to that, because when it is a community that is not only spending their money there, but they also own a part of that community, or they're invested in that community, that's how you start to leverage or better yet level the playing field against the major giants. And even as we've seen this last year was a tipping point. So in so many ways, not only social, economic, and political ways, but people starting to understand that they're no longer really starting to accept the fact that the larger corporations is the way to always go. So we know that if there's a safe way for investors to truly get returns, but then make impacts in their community, you're going to start to see more people move in that direction. But they have to know exactly how that works. So some of the things that you should be aware of is the building businesses through entrepreneurship through acquisitions. This whole concept is simply when an entrepreneur, you have quite a few of these companies, firms that actually, that's what they do. They literally buy companies anywhere from the 5 million in revenues to 25 million in revenues, and they take those companies and they groom those companies, and then they start to expand. And oftentimes, kind of like what our strategies look like, they expand into communities that they're going to make the biggest impact. And then oftentimes you'll find stores, if you have not really paid attention, stores that you haven't even really heard of. Okay, so I'm going to just give you a scenario. There has been a trend here in Maryland, because that's where I'm located, where there's companies like Aldi. There's another one named Edel. And these are brands that have literally come from overseas. Because I believe when I was looking at it, Aldi was founded as still, I think it's still a family-owned, majority-owned company, which is a kind of a supermarket, but low cost, specific, and the same with Idle. Idle is also the same type of company, but they are located in centers, in communities where they don't have to have big shopping areas, so to speak, shopping with supermarkets for food, grocery markets. So they found their place in that. But the difference in them and then, say for instance, a Walmart supermarket, they're not they're not publicly traded. They're literally keeping most of their profits and everything in their family. So that same concept can be done with the local markets or local people that live in the community, because you also have co-ops. So the reason I'm bringing that up is that there are ways that, say for instance, if a co-op chose to buy out a company much like that, and a co-op, if you're not familiar with the co-op movement, the co-op is owned by its members. Its members is much like Costco, but they own that company. So they have a say on what that company does. These are the type of companies that we're saying that that's what you want to invest in. If you know they're already successful, they can show you 3 to 5 years of revenues and all, but the growth aspect should be through and through acquisitions. So in other words, these are the type of companies that would really boost your bottom line in your investing and your returns, and they're fairly safe. We're not going to ever say that there's nothing risk-free. It's just that these companies, again, have consistent revenues, and then they have the ability to grow, but most of them don't know how, or some of them are just saying we're fine where we are. So again, it goes right back to invest where you spend. There's several opportunities when you know that you are part of a company that, or not when I say part, but you're investing in a company that you go to, just like a co-op. I spend my money there because I am invested in it. So those opportunities exist as well. These are the things that help create wealth, not only in that community, but it also helps create wealth in your legacy. So now you're not just relying on your self-directed IRA. And we do say that that's why you have your financial advisor to make sure that you're hedging and diversifying. But you will start to see that some of these opportunities will start to outpace your traditional investments. And the other thing is managing that wealth. Once you've got to a place where you're now moving to that next level of becoming a accredited investor, and I'll revisit that shortly, you're now having to learn how to manage that wealth. And the traditional way of doing that is always saying, okay, well, we're going to go to my CPA, and then we're going to go to my financial advisor, and we're going to go to my attorney, and you're going to get a piecemeal kind of approach. We'll visit how you kind of start to show, how do I bring a team together that's going to be on my side to make sure they talk together, to make sure that my wealth is going to be managed. But then move to, preserve. Venture clubs are pretty much along those lines. Okay, so that's how you start to find these deal flows, because there's these things that start to pop up. I'm not sure if you heard of venture clubs. Oftentimes they've been referred to as investor clubs, but venture clubs also are some of the upcoming trends that you're going to start to learn more about. And when you start to see that, there's a platform that we are familiar with, and platform literally has everything that you would need to do that, which we just spoke of investing in your community safely. Now, I want to revisit what I was sharing real quick with when I just pretty much outlined exactly the point where you're saying, okay, well, I really do want to create my wealth and manage my wealth, and then continue to move from that aspect. Because if you're not familiar with the single family office concept, I just want to give you a kind of brief overview. Do your homework on this. The virtual and single family office is that holistic approach to your family's wealth and legacy. Okay? And that's exactly what a family office does in the traditional sense. They bring your attorney, they bring your investment advisor, they bring your insurance people, they bring your CPA, and if you're a business owner, they have the business. They're all talking to each other to pursue and then make sure they implement, plan, implement, and then preserve your wealth. So you have a team of professionals literally guiding and managing that family, which would be your wealth. That's their sole purpose, to make sure that you continue to gain those, look at the risk that you're in, make sure your portfolio is going the way it should be going, and their main job is to be your guidance team, your wealth team. And the main thing that I try to get folks in, because we do participate in it. We have our family offices, and what we are doing also is making sure that as we obtain the coveted so-called accredited investor, which everyone should be willing to, because the difference between a accredited investor and non-accredited investor is that an accredited investor usually gets first dibs, and just like an angel investor, on the deals that most people do not get access to. And that's per the SEC, the Securities and Exchange Commission. So therefore, now you're looking at, whereas most investors are getting returns on their investment, accredited investors usually get multiples on their returns and multiples on their investment. And the difference is, returns are usually percentages, and then your multiples are usually 2, 3, 5 times what your investment is. And that's how you find those that are literally open to getting those businesses that are either expanding or those, invest in those businesses that are startups, but they have a hot idea, their platform. So our goal is always to strive to get folks to go to the accredited investor because you're just going to be freer and then most likely able to get, higher returns. Now that does not mean that you're not going to have some that are going to be bust, as I presented to you all earlier about the VC and his, their investment that went ghost on them. Nevertheless, becoming an accredited investor should be everyone's. If you're in the investing game, that should be your goal. Direct and co-investing, those are really the things that make a single family office work. We're part of a family office group, and direct and co-investing is some of the things that we like doing because it does leverage each other's resources. It makes it a little more safer when we invest or when we look at investments. And then we make sure that when we do that, again, we know who we're investing in, who we're dealing with. We've done our homework, and usually our returns are going to be in the multiples. And simply because we're closer involved, because we have a different role than just investing in these investments. Another thing that we're big on is the expansion of acquisitions. So when we look at companies, those companies are now probably making revenues because we do have our criteria. Say, for instance, we will not invest in companies that are less than 2 years old. And this is, again, an example. This is not soliciting anything. This is simply an example of how we set our criteria. But we are right now looking at a company that's older than 2 years old. It has revenues of over $1 million. It usually has a net profit of 18% or more, or EBITDA 18% or more, has a proven management team, and that it has an established customer base. So when we set those criteria, that really alleviates a lot of companies that we're even going to intend to consider. So that helps us to know that, okay, we can leverage and see what our risk is and then start mitigating our risk as well. And why that becomes important, because one of the other trends that we'll mention that's coming up is what they call the silver tsunami. The silver tsunami is business owners that have put together years on a solid business. And as I alluded to earlier, after last year, they're done. They're like, okay, we have a good business. We still made our money. The business still now a viable business that we can just go ahead and sell. We're not passing it down to the kids. We don't want to do a purchase or buy out by the employees. We just want to sell this and move on. And this is coming up because the brokers that are approaching us, business brokers and so forth, that are approaching us, they're bringing us deal flows that, again, has some very, very good businesses. And again, there's more of us showing up. And when I say more of us, investors, that these businesses do not last on the market very long. They usually, go under contract rather quickly. So again, this is definitely a trend that you'll start to see and start to get more information about, but you're going to see that it's going to start becoming more prevalent. So with that being said, I wanted to just briefly go over one of the case studies, which is a project that I had actually worked on a couple of years ago, and we were doing the investment raise. Unfortunately, I had to, full disclosure, I had to leave the project early because my mother had suffered back-to-back heart attacks, which, I thank God that I was in the position to be able to become her primary caregiver. She passed last year, but the whole thing was that when I entered into this project, it was a veteran. He was U.S. Army, also was a good friend. And it fell right into the guidelines of what we're doing today. So I'm also kind of give you guys, everyone understand, when you start to look at these numbers, these are not typical numbers. Key spoiler in this, before I had entered into the project, he had already given up in his company just to make sure that he get this project completed, nearly 67% of it. So here is a minority owner at that time. But he was dealing with a lot of accredited investors. So this is why, again, one of the other things that we want to do is make sure that we are able to help work out a fair plan for the business owner as well as the investors. There should be a balance. It shouldn't just be all investor and so forth. But with that being the case, in this capital investment, 1.9 million was raised. And I'm gonna just say this: it was a great return for the investors because they did get, in addition to that, they were getting quarterly payments of roughly 119,000. And then when they had the finished product, there was a equity distribution of that 20%. So 20% of that, and mind you, they sold out this project. What it was is if you look it up, Villas at White Oak Ranch is a 55 plus active adult community. Now, the best part about this, his first year in this, he won awards for the best house, best display in the 55 category from the housing administrator or the housing development or some kind of association. So this is his first rodeo. It was his first deal, but he won awards on this. So and he has impeccable taste. The houses were gorgeous. The model, it was just everything fit. He had the right team around him. And it was just, one of those scenarios that investors saw, yes, this is the kind of deals we want to get into. Of course, I felt that they kind of took it to the next level. But when you start to see their numbers, their total proceeds came out of at a $2.9 million investment for 1.9, they got a 2.9 return, which puts their, IRR, which is internal rate of return, at 48.1%. This is not typical, nor is it something that I would probably say to any of my business owners is like, okay, you obviously did not want to have your company, but I understood his purpose in doing it because now he was able to move on to another project in Austin where they're doing the same thing. And now, he was able to get a better ownership stake in that project. But again, these are the types of opportunities that if you have the right people, if you're connected to the right people, and you want to see these type of deals and all, they are out there. They are out there, and it can make a difference. And even when you start to look at how self-directed IRAs are being used right now, the tax advantages speaks for themselves. Okay, so those are some of the things to definitely consider. And finally, just to go through some of the statistics, just overall, and why your self-directed is also so important to your community. And we'll wrap it up after this. The key factors in this is that diversity does matter and it has a bottom line. If you stop and think about, on average, what the women raise as half as much as the men, they also had a higher return per dollar invested than the men. As it says there, from 78 cents, they earn more, almost twice as much as the men earn. But it's very easier for a man to get that type of look and invested dollar than most of the veteran, minority, and would know. But we want to change that by making sure that when we are coming in this first phase, when we're dealing with self-directed investors, self-directed IRA investors, we can make a serious impact just in that space. So I would want everyone, we can follow up later with us, and we can help you also better understand a lot of these things. So that's where I'm pretty much ended, because it looks like I'm about out of time. And I hope you all enjoyed it. You can always, again, reach out to Renika, and she can help you with everything from there to if you need to contact us. But I do thank you all for our time, and I thank you, Renika, for this opportunity.
Yes, hi, Robert. Thank you so much. Great information. We are top of the hour, but I do have just one or two questions, if you can.
Absolutely.
So, yeah, first question is, what areas or states that Providential Capital typically invests in? Is it, Southeast, or is it just, nationwide?
We're nationwide. It's really based on the project. And right now, Providential Cap really focuses on accredited investors. But just three things is, we have a 3-tier operation where we're looking at tax certificates, private equity, which means acquiring companies that have $5 million or more in revenues. And then we also look at the opportunities for, we do the tax certificates, private equity, and then we also, there's a new fund that was presented to us. So don't quote me on this. We're still reviewing it, but that's where we are. We are nationwide, and we do work in those areas right there, private equity and then tax certificates.
Okay, thank you. I have another question is, how do you select an investment project in terms of whether it's a short-term hold or long-term hold? Do you have, going into the project, you decide if it's going to be a quick turnaround or a longer-term hold?
All right, so if it's a Providential capital acquisition, it's usually going to be a 5 to 7 year hold. And we are looking to, once we acquire it, we typically already have an exit plan, exit strategy, but we look to keep it for 5 to 7 years, no longer than 10, because of the limited partnership agreements that we have in place. And then we look to expand it and then sell it off.
Okay, and you just touched on limited partnership. That was one of the questions. How is the deal structured in my IRA? So it's through a limited partnership, correct?
Yeah, and again, you would have to be an accredited investor in order to do that. But yes, it is structured like a limited partner.
Okay, that's all of the questions that came up. Again, Robert, thank you so much. Great information. We're top of the hour. If you have specific questions about self-directing, you want to know more, definitely feel free to reach out to me. Visit our website. We have upcoming events. Always continue to look at our events page. If you want to know more about Providential Capital, definitely feel free to reach out to Robert. With that, I'm going to go ahead and end today's webinar. Thank you so much, everyone.
Thank you.